Welcome to a special edition of the Moonshot Dispatch, which is most definitely live.
Why is it special? We're not going to say.
Because it's live.
Okay.
It's
They're
not
all live. They're all
we didn't
live.
record any of this.
Yeah.
Just me chatting to you casually, like we won't edit out the bits where we stuff it up.
Yeah.
How good is Tuesday?
Yeah.
Just, you know what? If if Monday night came, theoretically, like let's say today is actually Tuesday. Oh wait, hang on. Theoretically, literally Tuesday. Imagine if last night changed on us and all of a sudden we're talking about things and something happens overnight and it makes us look like complete idiots.
Well, we wouldn't go to air.
But how would we know that? Because today's not Monday.
Yeah,
Today
right.
is Tuesday.
Yeah. So we do know what's happening.
Yeah, correct. So how's yours Tuesday, Nick?
Yeah, good. I'm doing my normal Tuesday things like this live moonshot.
Yeah,
Dispatch.
I'm not actually in plane or anything on Tuesday, so I'm
Yeah,
here.
okay. Yeah,
Yeah.
good. Good
That'd
to
be
hear.
weird. Well, how could I do this recording if I was in a plane, Nick?
Yeah, you couldn't.
Doesn't make sense.
No.
Doesn't make sense. All right, so we've established today is Tuesday, and over the weekend, the most important thing that happened was a huge dump and a huge pump off the back of the Jackson Hole non-event.
Yeah, yeah. So I think there's been a lot of talk recently about how these days we've sort of got these, announcements of announcements style things. So people are, buying the news, buying the rumour, selling the news or whatnot. But yeah, we're seeing a lot of that. Jackson Hole, Jay Powell's forward announcing things that he plans on doing in September, and that's enough for the market to go, all right, it's locked in. And it's kind of creates this interesting situation where we get a bunch of market activity off the back of a kind of an announcement. Then what happens when the actual numbers change, So if they change in line with what he says, well, I'm kind of thinking there's going to be, there'll be still a movement and everything, but it might be a bit muted. If he decides to renege on what he's suggested, then we'll get a real reaction.
Yeah, because the Jackson Hole thing was a complete talk fest where nothing was decided and nobody knows what's going on. I think that's the official summary that they come up with.
Okay.
Because Jay Powell at the beginning of it came out and said, well, we'd have to lower rates, but hang on, inflation is up and jobs are down, so we don't know what to do. The only person who seems to know what to do is Trump, who threatened to sack Governor Lisa Cook because of some alleged mortgage fraud, which just seems to be, I don't know if that's true or not. It's an allegation. But, when in doubt, sack somebody. I think that's Trump's main thing. But yes, so that was the big thing that we took away from Jackson Hole is that nothing was decided and nobody knows what to do. So interesting times that we live in.
Yeah, I think I got something else you can probably glean out of this is that because he's hinting at these rate cuts, to me that kind of says he doesn't he's happy to let inflation run hot, and this is kind of the stance they're taking at the moment. They're like, look, we need to boost the market. So, yep, inflation sucks, but this is the life we live, and that's kind of that's very telling in my mind. They're not sitting there trying to look after the market. It feels like the Fed is less and less independent of the administration. Anyway, let's see what September brings. But markets loved it.
And then didn't love it.
I feel like the didn't loving it bit was based off some other bit of news. I don't know if you heard about the the massive Bitcoin sell and Ethereum purchase that happened this morning, basically. So I guess markets were pretty happy with the Jackson Hole, with Jay Powell's announcements, and everything went higher, and everyone was like, that's it, bull market's back on. I'm hearing people talk about, we're in the 8th inning, boys. Everyone long your longs and whatnot. But then some guy came in and did what was like one of the biggest trades ever on a decentralized exchange and sold something like almost 20,000 Bitcoin, which is like $2.something billion.
Yep.
And then with that money bought Ethereum and pumped a whole bunch of Ethereum longs, and is still to this minute, as far as I know, buying Ethereum.
This is incredible. So we have to unpack this a little bit because the method in which it was sold. I think a lot of people would be really interested in the interconnectivity between the various markets. When people talk to us about trading, or when you hear it reported, often it's like when you hear someone doing a big sell, and everyone thinks they just go to a large exchange and just press sell and the whole thing just happens on one exchange. But that's actually rarely the case, particularly for a market order that size. It's just actually not possible. There's no order book in the world that could probably handle one market sell of,
Until this morning.
Until this morning, which is incredible. Normally these things would be done over the counter.
Yeah.
But of course, the technically speaking, I guess the OTC market would be a different market, but they're all interconnected really fundamentally. And even the DEXs, they're all interconnected. So that's actually one thing I was going to, because that's, I guess, the big news for this week, and will not change before tomorrow.
Which is Wednesday.
Yes.
Yes.
So I don't know why I would be concerned about that, because it hasn't happened yet.
Yeah, it's a strange day to be concerned about. There's other days too we should be thinking.
You're correct.
Anyway, continue.
So as far as Tuesday is concerned, I'd love to pick your brain, because I mean, you deal with this and you look at these markets daily. In fact, that's your job. That's probably why I look at it. So explain how they're interconnected, but also how they're different.
Same, but different.
and how does a 20,000 smash sell on a DEX impact the broader market, the traditional markets, I guess, that we're familiar with? First of all, I guess other order books like our own order book, but then also, I guess, OTC markets.
Yeah, you can see this kind of effect, and the interconnectedness that you're talking about is just, it's live everywhere, right? You'll see when there's a big market movement, it'll affect exchanges everywhere. So you see the price kind of, telescoping out to all the different exchanges. In terms of OTC, it is a sort of one of these things where, when we're speaking to our customers, they often kind of don't understand how it works behind the scenes. And I think I've spoken about this in previous weeks, see a lot of people talk about how, like they'll go, oh, this person sold like, $100 million of Ethereum or whatever. And then other people will reply saying, oh, but it doesn't matter because it's on OTC. So that's why you won't see, full of confidence and knowledge that they're right in what they're saying. And yes, technically it is possible to sell to an OTC desk $100 million worth of ETH, and the OTC desk has lined up a buyer directly, so they've literally matched two customers that they have, one's selling, one's buying, and that will have no effect on the market. But the reality is, like 90% of OTC trades don't work like that. They're sort of, the OTC desk that is facilitating the trade will have multiple different ways of hedging their risk, hedging their exposure. So someone sells 200 million Ethereum to the desk. The desk, it's like battle stations on the desk at that point, and they're like, okay, how do we hedge this? And they will basically look across the entire market and find where the best pricing is, and then try and offload the ETH on that best pricing. And that's what they use, that kind of market surveillance kind of, that's what they use to price the customer in the first place. So if they can find a venue, or if they've got rails into a venue that has better pricing than most other places, and the OTC desk's competitors do not have those rails, then that OTC desk is going to be able to offer a better price to the customer than the other OTC desk, if this makes sense.
Yes, it does.
So when you're choosing an OTC desk, they're not all the same either, right? And this is one of the massive advantages that we have. We're like the oldest OTC desk in Australia. So we have built these relationships, and we've got these rails into so many different places, locally and internationally, that when someone comes to do a big trade like that, we can we've just got so many options we can go to and find the best pricing for the customer.
Yep.
Whereas we've seen like a lot of our competitors will have a single rail that they use for their OTC. And that's fine if you've got a small OTC desk and you've got unsophisticated customers. That totally works, right? You only need one rail, but that's not how we've built our desk. We've got rails everywhere, relationships across the world basically, and it's not just with other OTC desks that we talk to. So we'll do things like looking at exchanges, looking at decentralized exchanges as well as centralized exchanges. And that's why you see when generally when you're doing a big trade on OTC, yes, possibly there's a chance that they're matching it against a single customer, but likely they're actually farming out the liquidity and hedging it across multiple places. And that's why you see the same price action happen on multiple places. And it's kind of interesting, like when we do it with some customers, you can kind of point at one of the candles on the chart and go, that was your candle.
Yeah.
Because even though this is not a candle on our exchange, we can see that as we're farming this position out, all of the exchanges are kind of getting that same sell or buy candle as the customer is actually like affecting the market in real time. And so it's just not true when people say it doesn't affect the price. It absolutely does.
Yeah. No, absolutely. And it's just that I guess those wholesale markets tend to be super deep, right? And that's
exactly.
the thing. These sales just don't really, unless they're absolutely gargantuan, and they're because of the way they're so well hedged that you just don't tend to notice the impact of them.
It also depends on the currency as well. So if we're just talking Bitcoin or Ethereum, yeah, absolutely. These markets are massive. You're going to have to really struggle. You'll struggle to make a dent in to create your own candle kind of thing. But on the smaller cap things, you can absolutely do that. Smaller market caps, you'll move the market. Yeah. And this is part of the job. We have to tell people, look, we'll do our best. You be as gentle as you can in the market, but often, customers might want to break trades up because there's just not enough depth.
Yep, and that's fascinating. So the in the case of the DEX, so this particular trade, I mean, I don't know enough about the details, but they go straight from Bitcoin to ETH?
No, so I think they were using the USD markets for both.
Okay.
And it wasn't just like a market sell, like you're crazy to do that, but the market, like the DEX itself, just had enough liquidity over time to handle this. Pardon?
20 billion in liquidity.
Yeah, over time. Like not in one sell, but
it's a lot of liquidity showing up though still.
Mind blowing.
Yeah. Fascinating. And so in that case there, it was being distributed into ETH liquidity over a period of time.
Yeah, that's right. Yeah. And so if you're looking at the charts, you can kind of see Bitcoin's mostly absorbing it because we've Bitcoin's had these big sells before. It's nothing new. But Bitcoin kind of it was humming along pretty flat. If you're looking at Ethereum chart at the same time, it's climbing, so it is getting affected because, as we spoke about last week, the Ethereum market cap's about 30 times smaller than the Bitcoin one. And so it was getting affected by these buys and the price was going up. And then the reason why we got this massive sell-off candle yesterday morning at about 5:30 was because, as far as I can tell, as far as we know, the market kind of realised that it wasn't this like crazy sustained buying pressure. They had a look at the actual, because this is a DEX, so you can actually see the wallets that are doing this stuff. And there's basically two wallets, two entities that, as far as we know, are actually related. So one entity was doing all of this stuff, and everyone was like, "Oh, this is one person doing all this," and that's when everything just went like that because they realised it wasn't sort of this organic buy pressure on the ETH market, and they're like, so ETH isn't going to the moon suddenly. It's just one guy who's buying, and he's basically filled his bags, and and he's done buying now, and so everyone's like, "Oh, okay, I'm off." Off risk because it was it's pretty interesting how that stuff is so visible now because so go ahead. I was going to say comparing this to OTC, that's one of the big advantages of OTC is it's off exchange. You can't. There's no. It's like a private trade, right? So you don't actually see what's coming. You can see it afterwards, but with these DEX trades, you're watching wallets. You can see transactions going through the blockchain and stuff. So it's much more transparent.
There's the great chart which will just magically pop up here at some point to discuss, and it's fascinating. And the reason I'm pulling up this chart is to show, I guess, the point that you just touched on was about the visibility of on-chain, I guess, analytics and the like. Now, this particular chart that we're showing here is outlining and providing a visual representation of the on-chain activity in terms of short-term holders versus long-term holders and whether they're selling in profit or loss. And so just as, I guess, a broad thematic, I guess one of the things the on-chain sleuths are looking at is the ratios, the percentages, if you will, of the differences between the short-term sellers who are selling at a profit and those who are selling at a loss. With the big sort of theme, the big thematic, the big concern being we make an assumption here that the short-term holders tend to be the paper hands of the market, and if they're selling for a loss, does that indicate that the marginal buyer is starting to panic? Right. So if you have a look at this chart, let me just pull it up here so I can discuss it through here, because I know these things are a little bit hard to see. But let's say, for example, you can see there's the. I got to zoom in on this myself. You can't see me looking at anything because there's a big thing up in front of me. But the short term, so the short term that's held in profit, so you can see kind of the dark pink, is the short-term profit, short-term holders which are in profit. And then there's the light pink shade, which is the short-term holders that are in loss. Okay. Right, so these are people who are moving their funds to an exchange where they've identified effectively these people have lost money, yet they're sending it back to the exchange, presumably to sell, because they're getting a little bit nervous, right? And when the herd turns, I guess that's the signal that people are looking for, right? And so the last time we had it here, and sorry, I'll just quickly run through the rest of that just so you can make sense of that chart. And the dark blue line there is, for example, the long-term holders who are in profit. And so if you just look at those numbers and match that against the Bitcoin price, it doesn't tell you a heap here because this particular chart is actually just from the last month effectively. So, but the last time we had a large amount of, I guess, short-term holders selling for losses was around January this year when we saw that last sort of price dip. So I guess the implication here is if enough short-term holders, people who bought recently, who thought they were in for a quick buck, aren't quite getting the quick buck, they're going to be the first ones that panic, but that marginal buyer is super important. So I guess that begs the question, and when we're looking at the market and the current structure of the market, what we're kind of interested, I guess, to have a look at is saying, well, look, hang on, okay, so if what are the signals that we can take from long-term holders selling for a profit, and what kind of signals can we take from a short-term holder selling at a loss? And I guess, like I've said before, right now, particularly since the middle of August, we've seen a huge increase. It's pumped up from about, what looks to be about sort of 20% of short-term holders selling for loss to more like 61% now. So what does that mean? I guess we can kind of look at this in two ways depending on what happens next. One would be like, hey, the market kind of like doesn't blink. It gobbles up, I guess, a lot of this extra supply nice and quick. And it shows that we're kind of, I guess, in a really fairly robust market and the things can continue on a fairly stable footing going forward. But also, if we start to see some increased selling at this rate, we could actually be in for somewhat of a correction, I guess, until we kind of flash out a few of the weaker hands. So which way will it turn? I don't know. I'm just here to tell you what Cointelegraph has been telling me. But this is an interesting, I guess, junction. We just saw a huge amount of selling pressure. And so far, I guess we're only 7% or so off the all-time high. So is it panic stations yet? Probably not. But is this something, I guess, this online sleuths will be looking at? Absolutely. Yeah,
a lot of that on the on-chain analytics is very interesting. And I think you can look back at on-chain stuff and point at, things that seem obvious. But a lot of the time, if you're doing it in real time, it's hard. There's just so many so many metrics now that you can look to. It's hard to know which one's the one to look at. A lot of people on my Twitter feed sort of throw up these different metrics, and I swear to God, every time I read something, it's like, oh wow, I've never heard of that metric. It's some new one that someone's invented, and it's like,
totally.
Now if you look back in history, this one was predicted the top every single time, and we're not even close yet. And I'm like, yeah, because it's not going to predict it this time.
Yeah.
So I don't know. I'm a little bit skeptical about the on-chain analytics stuff. Do you remember a guy called Willy Woo?
Mm-hmm. Yep.
Yeah, he was like one of the first on-chain analytics guys back in the day, sort of a couple of cycles ago. And he had everything to say about everything. I don't know. I don't think it turned out very well for him. Having said that, we've got much more sophisticated with our on-chain stuff these days. And I know Check, James Check.
James Check, yep.
He does a lot of that stuff and very successfully as well. So I probably need to brush up on my latest on-chain stuff.
Checkmate content.
Yeah, exactly. But proof will be in the pudding. We'll see how he goes.
We've got a webinar by James Check on our channel.
Awesome. Yeah. So yeah, if you do want to check out more about James Check, definitely worth listening to. Even if you don't sort of use the on-chain stuff, he's a very interesting guy and talks very authoritatively about all of this stuff. I follow him on Twitter. He's
good content.
Yeah, good content, worth checking out.
Link in the description. After the show is recorded, of course, because we're live on Tuesday. But the fascinating stuff. And look, I mean, I guess the overarching point here is that we actually have real-time information about market, who's buying, who's selling, which is something we've never really had before. As you mentioned before, the OTC markets are a little bit of a black box. You can trade with this guy, that guy can trade with that guy, but where are they hedging? Who else are they trading with? The impacts of all this kind of flow and effect is not really visible.
No.
You kind of just see it once the market's moving one way or the other.
And
we're left to kind of guess what caused what.
And in the end, even on these decentralized exchanges where it is transparent, we still don't know who's doing it. So for all we know, this could be the US government. This could be, we don't know who this is. Could be an exchange doing some prop trading. Like, you just don't know, or it could just be some guy in the basement. So yeah,
incredible. All right, that's. It's like, again, it's just fascinating stuff. And these markets are just. We've talked about this before. The idea that markets are effectively just people doing random shit. Effectively, we try to find some. Everyone's trying to look to find some rational way, some metric, some key thing to measure. Oh, I know exactly what the market's going to do because of some ratio here or some ratio there. Of course, no one knows. And the more you sort of believe your own hype, the more likely you are to... pride cometh before the fall. Is that a good use of that quote? Because when you think you know what's going on, like, that's when you're likely to stuff up. And it's just the fact that these things are just... what am I trying to say here?
Well, I think one of the interesting points here as well is that markets will test for weakness. So it's not just that you take a position and you get it wrong. If you take a position, especially if you make it a public position, and we can see this like on the open interest charts as well. So a lot of the time there'll be this huge build up in open interest in leveraged positions, and you can see it's like data that everyone can see, and people will be like, okay, cool. So let's just say like there's a lot of long. So a lot of people betting on the price of Bitcoin going up. And so they're all expecting it to go one direction. They'll all have a liquidation point, right? And that stuff is accessible too. So you'll see in the data, okay, so there's $1 billion of liquidations at this price. If the price goes down, the market is going to test that. Like it's almost inevitable when there's enough single direction like a leverage in a market, it'll get tested to the other direction because there's profit there. Right, so it becomes game theory immediately, and people are gonna test that downside. Liquidations are gonna happen. They're gonna have their own short, which is not only are they earning funding on the short, but they're gonna get paid for it when everyone else gets liquidated, and then they close the short once the liquidations are finished. And so there's these things, like you can try and find as many fancy ways of beating the market as possible, but in the end, you got to be so careful because you're going to get tested. You're going to it's not just you get unlucky, it's that people are going to try and make you lose money because that's how they get money.
Well, that's the whole Terra Luna thing.
Yeah,
right?
Exactly. Yeah,
Terra Luna.
Literally. Yep.
People found a weakness and you're going to get tested on it. People are going to come after you because if they can break it, then they can make money out of it.
Exactly.
It's basically, you want a nice cheap shower, so you find a damn wall and just find the weakest one and make it rain. Which damn wall is the weakest? Yeah, fascinating stuff. All right, I have to keep moving to the other big news today. Metaplanet. The Japanese one, is going from strength to strength. So they're that Bitcoin Treasury company in Japan, which everyone knows about. But interestingly, they've been upgraded from a small cap company into a mid cap company. So now included in the FTSE Russell September. Well, in September 2025 semi-annual review, they got increased in size, such they are now in the FTSE Japanese index. Yeah. Which is incredible, which is going to provide a lot of liquidity for that stock.
That's right.
As a lot more people now are kind of forced to keep it in their basket of stocks, they have to.
Exactly. Yep.
And index managers and all that kind of stuff have to start buying it.
Yeah.
So from this little company of relative obscurity to taking on a Bitcoin Treasury strategy, they've stated they're going to try and get to 1% of the holdings. So they want to go for 210,000 Bitcoin or whatever they did. They definitely said that. That's what the CEO came out and said.
Yeah, awesome.
They have absolutely transformed that little penny stock into.
I mean, it was a hotel or something, wasn't it?
I'm not sure.
It was.
I'm not sure. Was it a gaming platform or something?
I thought it was a.
It could be. I don't know.
Maybe I'm thinking one of them was a hotel. I'm pretty sure I thought it was Metaplanet. Tell us, chat, Jared.
Let's have a look. We'll madly Google that one. But that's an incredible story. Now, so in July, the Metaplanet CEO, Simon Gerovich, so he signaled that they might use some of their company would use a portion of its Bitcoin stash to buy income-generating businesses, and floated the possibility of acquiring a digital bank.
Yeah, right.
Or businesses adjacent to digital assets. Yeah. So that's just incredible. That's
getting a bit frothy. We hit the top. Really? Metaplanet. Yeah, okay.
Yeah, but the company's they definitely said that they were going to try and create a 1%. So still, okay, so market's frothy. I guess that's the question. This small, whatever it was, hotel / VC company, business that was of obscure business, turned itself into now a bit of a powerhouse of the digital asset space, at least in Japan.
They follow the strategy playbook and doing pretty well out of it.
Mm.
I mean, it's the same thing with strategy, right? Like they were in the NASDAQ or whatever, one of those indexes as well recently. And so now suddenly everyone has to... Has that happened? I might be tripping here. There was definitely talk about it. And basically it would force all these funds to start buying it. And we say force, like the funds just buy the index, right? And it just happens. It's a great way to sort of keep the money flowing into that stuff. As a Bitcoin maxi, is it what we want? Do we want these corporates buying up all of our Bitcoin? I don't know.
Depends on how much you have, I guess.
Yeah, I suppose.
Do you have enough Bitcoin?
No, never enough.
No, never enough. Yeah. I guess if this business, depends on what they do. Oh, which reminds me, I got to the bottom of the Bonk issue. I think I told you about this.
The Bonk issue?
The Bonk issue. The Bonk Treasury strategy.
Oh, okay.
Remember we talked about this?
Yeah, tell us.
So I reached out to some friends from Bonk, and they were telling me it's actually kind of interesting, is that in some ways, and I hope I'm doing justice to the Bonk story, was that there is the guys who kind of started Bonk are just like these really sort of interesting sort of dudes of entrepreneurs who have, even though Bonk was this meme coin, they did kind of well out of it, and they monetized that, and they monetized the value of Bonk into a number of actual businesses. There's like a games platform, and an index, DEX, and there's a couple, and a wallet. I think the other thing is as well. But anyway, they've got a number of businesses that actually make money, which is good on them, right? They kind of got early in, did well on the Bonk thing, built a community around it, turned it into some actual businesses. Now they're looking to use that Bonk for other, I guess, business activities. And why not? And one of those strategies was effectively to go into a business. I don't know how in the detail that we went into it in our discussion, but effectively these guys went and I think they called SPACs or whatever, those kind of reverse takeovers where they kind of went to them and said, "Hey, do you guys want a bunch of Bonk as your treasury asset?" And they're like, "Sure."
We're not doing anything.
We're just going to do this thing, and. Then they're onboarding people with the expectation that Bonk will be used to invest in activities, and other companies that will take Bonk, keep it as their treasury assets, but as they make money, they need to burn their Bonk.
Burn their Bonk?
Yeah.
Why?
You have to ask the people from Bonk. But the idea would be, the tokenomics would be that they would...
you burn a bunch of money? Well, not anymore, because you've just burnt your Bonk.
Well, then that will push the value of the Bonk up.
I guess so, but they don't have it anymore. Oh, yes, I do remember talking to this about you. And my point was, I was wondering why they wouldn't, instead of burning Bonk, use this, be forced as part of the Bonk, Magna Carta, the thing that laying out exactly what they have to do, to just buy more Bonk, do buybacks from the market.
Buybacks from Bonk, yeah.
And that way, they don't burn anything, but they're holding more Bonk that they can't sell because of the Magna Carta or whatever. That's definitely not the right word, but... Yeah, you know what I'm saying? Burning Bonk seems like it's almost like punitive. It's like you've been a naughty boy, now you have to burn something.
Well, then the value of the Bonk would go up.
We haven't been naughty. Yeah, but that's such a tenuous link in my mind.
Yes,
sure. The value should, in a theoretical bubble, go up, but there's a lot of market forces in play. And it may go up temporarily, but these guys are shooting themselves in the foot. We burned all our Bonk and it didn't go up. And now we've got one Bonk left, and this Bonk theoretically should be worth $1 billion, but...
Well, check in with your local Bonk supplier to figure out if that's the actual strategy. But and I may not look, and to be completely fair, I hope I have done justice to that strategy. I may have got some things incorrect, but that was broadly speaking the way to do it.
And it's definitely a basic bitch take from me as well. I haven't thought deeply on this, and I'm sure I've got a bunch of things wrong. But
neither have I. Yeah. But it was more than just I guess the point I'm trying to get back to was the company, when they brought on the Bonk, they weren't just going, "Hey, Bonk to the moon forever." There was a business strategy and method behind how the way they were strategically going to use their Bonk to monetize it.
I
guess is the key point. And they do have the team that run it have a successful track record of providing cash, positive cash flow positive businesses with their, I guess, their management, the way they've gone about managing their system. So they're kind of using it to kind of use it, I guess, as a treasury asset, but a treasury asset that's going to be deployed into producing other, I guess, businesses in the space to, take them from little lesser known businesses to grown up businesses, monetizing the value of the bonk, which is in turn pays back everyone in the bonk ecosystem, which, and I don't know the economics of it individually, but it sounds like they've got a plan. Yeah.
Yeah. No, I've got a lot of time for Bonk, actually. I know they were sort of, they took the fight to Pump.fun, and I thought that was interesting because Pump was such a, monopoly for so long, really. And now, like, Bonk is sort of nipping at its heels. And I think, numbers are bigger on Bonk some days and bigger on Pump some days. And it's kind of interesting that there's a bit of competition in that space, in the token issuing space.
Yeah. So I've haven't, like I said before, like I've been aware of Bonk, but I haven't paid that much deep attention to it. But there's a lot more going on below the surface there than the I guess the headline would suggest, which is just a buy and hold strategy, which it's far from, in fact. And it's actually looked to be some fairly creative ways that the team are just building businesses in the crazy world of crypto that lives in 2025.
Yeah.
It's no longer the traditional way of doing things, that's probably the big takeaway for me. So I'm going to keep a very close eye on it, and long may their team succeed.
Yeah, I think I've spoken about this in the past as well, and I'm not suggesting this is going to be what happens to Bonk and Bonk treasury companies, but I do feel like we're going to look back on this in 5-10 years and go, wow, look at all those people just like getting so excited and turning their companies into treasury companies, and it did not last. And like there'll obviously be a few that make it, like Strategy are pretty well positioned. Companies like, Meta Planet, like they're all doing pretty bloody well. Hopefully these Ethereum ones do well as well. They're really going ham for it at the moment. But I think there might be a lot of sort of fly-by-night companies that don't really understand why they're doing it. They're just looking for a quick buck. And and it might not work out very well for some companies.
But I guess this is the mad dash of business, and this is what capitalism should really be about, is encouraging. I'm not saying excessive risk-taking, but people have to take risks, and people have to try new things, and people have to kind of fail to learn what works and what doesn't work, even if maybe history has shown us that things don't work.
Yeah.
We're doomed to repeat them, but in many cases, it's just how societies work. We have to kind of learn our lessons, and we have to take our risks, and some will work, some won't.
I guess as long as a consumer is like knows about the risk.
I guess that's the big thing that we don't want. You really don't want individuals getting fleeced in the meantime by people who take excessive risk or do stupid things. Yeah. But that doesn't. Well, I guess the challenge would be, and we come back to this all the time, as we don't really have crypto moves so fast, and the legislation and the framework about how to protect individuals is always so slow and so far behind.
Actually, 1 year from today, which is Tuesday ago, Pavel Durov was arrested.
Oh, the ton guy.
Today, which is Tuesday.
Oh yeah. So on this day, Pavel, how do you pronounce his surname again?
Pavel Durov.
Durov, that's right. Was arrested. So he wasn't arrested getting off he was getting off his private jet in France or something.
He's still in France.
Yeah.
He got arrested, and I don't know the exact details around, but I thought he got off. I thought they let him out, and they kind of said, "Oh, yeah, okay, we'll let you out on bail," or maybe he's still waiting for trial.
House arrest. Yeah, he's
Something
still
along those
online,
lines,
but
Tom Coin's been not doing well.
well, that was one of the other treasury companies. Remember, one of our first ones we talked about took on a bunch of ton, the Telegram token. Yeah, just depends on how much of a maxi they are. If they can ride the lows and enjoy the highs. Yeah, the Pavel thing's interesting. I saw he tweeted it, saying, "Look, it's been a year now. You've got me on nothing. Like this has become a farce. Time to let me go," kind of thing. They've basically said, "Oh, look, some people on Telegram, which is your platform, committed some crimes." And he's like, "Excuse me? Like, I didn't commit the crimes."
That's crazy. It's like, excuse me, some people in your country committed crimes. Are we going to arrest all the politicians now?
Yeah, exactly.
Sorry, send all the policemen to jail. Someone committed a crime.
Yeah, that's
Wait.
right.
They did that WhatsApp.
Yeah.
Yeah, that is outrageous. Just well, there's probably more to it than that, but still,
Yeah.
that's outrageous to think someone did a crime. I guess we saw this thing with Monero. I guess the same kind of question another way. Although Monero one, as we know, was a little bit more.
Monero, talk to me.
Well, remember when we were talking about this, the developers from Monero they were charged.
Are you talking about Tornado Cash?
Oh, sorry, Tornado Cash. Yes, I was.
Yeah.
My mistake. Yeah, we're talking about that same thing. They were like, well, we just made the platform. But then we also, then we saw that maybe they had those shirts that had
Oh,
like
yeah, the washing
the
machine.
washing machine, the crab, and it came out clean.
Yeah,
like,
yeah.
you know, you have to judge
That's
there.
right.
But it's
I
not
forgot
like
about that.
Prevel was out there going, you know, having a picture of a jail on his
Yeah,
Telegram
that's
thing with like a
right.
back door
It's
or
like crime
something.
here.
Yeah. It just sounds like that's the thing. I guess we're in this new space and people are still working out, do I shoot the messenger or like, you know, some people just use this, like, have you heard the story, like the first people who adopted cars were bank robbers? Like this analogy?
Cars.
Like some of the first
Right.
people to adopt, use cars were like bank robbers.
Right.
Because it was a quicker way to get away.
Yeah.
I don't know if
makes
that's
sense.
true or not, but like, you know, speaking of cars, actually, if we're taking a trip down historical memories and making comparisons in history, there was a great image I saw, and it was like this muddy road, and on the road was like one of those first automobiles, you know, those ones with thin wheels, and they weren't great for driving down muddy lanes.
Yeah.
Right next to and in parallel with a horse and a cart. And so those two technologies existed side by side. And what's kind of interesting, I guess, if we're drawing analogies, it would be that if you kind of looked at the guy in the car and were like, nice car, mate. Like, what do you need that for? Robbing a bank?
Yeah, it's so true.
And he's like, no, man, like this car's like really good.
It's
like,
better in every way,
It's better in
yeah.
every way. I don't have to feed it.
Yeah.
Well, apart from gasoline. But I don't need to keep it in stables overnight and
Apart from the garage.
the garage.
I mean, watch out for your analogy here. It's falling apart rapidly in front of your eyes.
Parking your car and feeding your horse overnight. Come on, I guess they both take up space.
It doesn't shoot on the. Oh no, it does have exhaust.
It does have exhaust.
Yeah.
But it's better.
It's faster.
It's better.
That's for sure.
It's a better way to feed it, and shit,
Doesn't smell so
it
much.
doesn't stink so much. Oh wait, it smells as well.
It
Hang
can
on,
be smell. Yeah.
we're just replacing one with a new one. Okay,
Yeah.
okay, so nothing changes. Let's go back to horses and carts.
Yeah. Let's do it.
I think that's what you're saying, Nick.
Yeah. I'm a
Yeah.
horse man.
All right, I didn't. Oh, there you go. I learned something new. I didn't realize that we should just give up on technology and just go back to candlelight
Yep.
and horses.
No, the
You heard it
Amish
first.
community they've got something going for them.
How do you reckon do you reckon the Amish are having a great time, just like avoiding all the problems with modern life? Would they just have the same problems, just in like, but they would just have like analog versions of them?
Yeah, I guess
Like
so.
teenagers are still
there's always going to be
teenagers are still rebellious. It's just that they're
Yeah.
just not churning milk as quick or something. I
Yeah,
don't know.
that's right. They didn't build.
Jeremiah
enough
didn't
farms.
want to didn't get up and churn the milk this morning, and
Yeah.
you know, society's falling apart.
Yeah, that's right. This would never happen in my day. I used to churn the butter every morning.
Yeah. Yeah. Okay. So I don't know why we're doing this podcast anymore, because we just solved the problem. We just need no more technology. We'd have no more problems. Well, that'd be the same problems, just simpler.
Yeah, that's right.
Okay.
Our podcast would be papyrus.
Oh,
Yeah.
how would you do a podcast in the Amish community?
I guess
Amish
you
communities?
go to the town square and just yell.
Here.
Moonshot papyrus.
Oh yeah.
Ding, 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 ding.
Hear ye, hear ye.
Behind his four farthings.
I guess. Well,
They would literally have pet rocks though.
they would. That's how towns disseminate information. There's always a different way to town. Actually, I'll tell you this. Singers are talking about completely tangential analogies of way society changes. What this has to do with crypto, I have no idea. But back in where I'm from, in a place called Temora, there was the way town information was disseminated was obviously at the pub, but there's also the local stitch and bitch where all the townsfolk or women would get together, knit, do their crocheting, whatever, and catch up on all the town's gossip.
Yeah, right.
Right? And no one was going there to knit. Everyone was going there to catch up on the gossip of the
Yeah,
town.
yeah.
And like you could hear about everything that was going on. I never partook in one, but I knew it was called Stitch and Bitch for a reason.
Yeah, that's funny.
Original Facebook.
Yeah, and this is where I'm going with this. So I won't say who because, well, you could probably guess, but like women in my life who I know, they spend a lot of time on like, it's like there's the district mumps pages and all this kind of stuff where people they just gotten rid of all they've done is gotten rid of the stitching.
Yeah,
Hang on,
right.
straight to the just the
They've
gossip.
distilled it.
They've just distilled it into a fine art.
Yeah.
And the amount of gossip that gets now disseminated via the internet is like 1,000 times quicker than all the old mums of yesteryear would have could have imagined. Increase the block size.
Yeah.
Maximize the efficiency of information dissemination. Maybe that's not a good thing. I don't know. But
Yeah, we live in the 24-hour news cycle now. This This is where it starts.
Well, this has nothing to do with crypto. I tell you what also has nothing to do with crypto. Our mate, Dan, who did not fall off his treadmill last week.
Okay.
We have evidence too. He sent us we can figure out a way to put in the link or well, there it is.
Not falling over.
Not falling over. So I know we know that last week our news just was not salacious enough. But we also said, well, that, actually, Dan, David is another one of our favourite listeners who always stands. He sits at his standing desk all day. So Dave, I hope if you're listening, you've just fallen over.
Yeah, the knees have buckled.
Knees have buckled.
Down he goes.
But thank you for tuning in.
Because of the
on
stitch and
Tuesday.
bitch, specifically, or just the other things we've spoken about?
I think of the hugely tangential news and the value that we brought with this tangential news.
Oh man, so this is our last episode, isn't it?
Why is that?
Because this is so bad that we're going to get shut down.
Who's going to shut us down?
No one shuts us down.
So what happened to Stephen Colbert?
Someone going to shut us down. Who's going to shut us down?
I don't know, like our boss.
Oh, okay.
People.
Okay.
I'm just joking. I'm sure we're not going to get. He doesn't listen to this crap.
Okay. Some news. Back to the news. It's because of the news. Well, because of this, the weekend has just been so action packed that we just haven't had a chance to really digest all the news. But anyway, I think we've had some fun too. Drawn some good analogies of nothingness.
Yeah.
Got any other analogies for us?
No, you've done them all.
All right. Well, we'll be back then. I guess we'll be back next Tuesday with even more interesting analogies. And even more. No? Okay.
Analogies are great, but the analogies we just did there, they all fail. I don't think it's worth analogies. We're just talking about cars.
I'm going to wake up tomorrow on Wednesday and have like 100 new subscribers. I'm going to let you know about it next Tuesday.
Okay.
All right then. Thanks for tuning in.
Cheers.